All right, everybody. Stocks by the numbers. Welcome back. Update here for Verizon Communications, ticker symbol VZ, listed here on the New York Stock Exchange. The stock has been on a slow and steady tear over about the last 11, 12 months, flying underneath everyone's radar as we see hitting new 52-week highs now, back up above $45 a share, closing even on that right there, up a little over half a point on the day, roughly 1.25%. Down a couple of pennies after hours, but hitting those new highs of 45 plus. And if you recall, it was basically around this time last year, as you see right here, bottom left of the screen, October 6th. That's roughly 3 weeks from today, would be 1 year ago. And you can see the massive rally that this stock has been on. So this is why, again, I'm doing another update here and just highlighting how this Buffett method really does, more times than not, work out well for you. And again, I know we're talking, if, like I always say, if you're a smaller time trader, you have like a couple of thousand, you're just trying to flip some options. I understand that something like this may not be on your radar because it's a slower move. So to try to time those options, unless of course you're able to buy like, 6 months worth of time or something, then chances are, this probably might not be a stock that you like to play when it comes to trading. But when we're talking about investing, again, for the longer term retirement accounts, if you're more well off, if you have like a 500,000, 7-figure portfolio, then you and I both know there are positions you're looking for where you can park 75, 150, $500,000. And in my opinion, you really can't beat something like a Verizon. Because first of all, I feel that the company's not going anywhere. I know the military's been using Verizon, and as much as we like to beat up kind of that quote unquote old school telecom and technology, we literally just did an update on Intel. And this is what I mean. When no one's looking, when they get taken out of the spotlight, they get beaten up. Everyone acts like, they're a dunzo company and they can't rebound and they're old news. Excuse me, they're old news. That's when the news comes in, the stock starts rallying, they start beating earnings, and then all of a sudden we're on the up and up. But I'm just showing you here that roughly almost 1 year ago now, approaching the 1 year mark in 3 weeks, the stock was beaten up down to new lows of 30.14 October 6th. And if you stepped in there, obviously, you are up roughly 50% with dividends being paid the whole way. And now, if you hold through the next 3 to 4 weeks, you're paying half the amount in capital gains tax. So this is why, again, I understand to see moves like this, it's frustrating when you don't really have the liquidity to build a long-term position and take advantage of it. So for a lot of you smaller traders out there, I know this may not be your cup of tea, but for all of my, wealthy, longer-term investors out there, you and I both know this is exactly what you're looking for, which is why, again, I feel that's where my true value is. Because calling some short-term trades, some short-term pops, of course it's nice because the options absolutely explode in value. But when we're talking about steady, stable investments that are almost inevitably and indefinitely going to appreciate over time and have us, secure profits for the longer term and really accumulate even further wealth growth, these are the types of positions you're looking for. So all of my larger, longer term investors out there, if you did happen to step in and buy some shares of VZ down when it broke like 35, 33, 31, obviously you're sitting pretty. So brag to us a little bit in the comments section. But it is the Buffett method again, strikes again. And over the last 12 months, again, you're looking at 50% growth plus dividends, and you're about to pay half the amount in capital gains tax if you sell it in about 3 or 4 weeks. But Verizon just looking beautiful here. You can see we got up above this trend line here. I know I have a lot of trend lines, but again, this is why I draw them out, because you can see we got above the trend line and then we ran up to try to retest the second trend line on 2 different occasions. And look, once we had that initial run up and then the rejection, the stock was essentially flat. Look at this. This is end January, February, until recently, August. Right? And this is what we always talk about. They get beaten up and then they'll storm back and they'll rebound and then they'll quiet out for a couple of months and then they'll storm up and take the next leg higher, right? So these flat or downward consolidation zones are necessary, which is why I always say, if you truly believe in a situation, then you have to deal with the short-term volatility, the short-term flatness, the short-term silence surrounding the stock, and then all of a sudden, boom, it breaks out, and you look like a rock star. But VZ again up here, 45 market cap here, 189.4 billion. We're still getting paid out a dividend that's currently yielding over 6% because of how much the stock dropped. Our PE down here sub 20, it's at 16.5. Look at the beta, 0.2. Again, beta, volatility of a stock in relation to the overall volatility of the market. This is roughly 2/10 as volatile as the market, which is why I personally always like Verizon. Again, even speaking to my shorter term, smaller account traders out there, something like Verizon was something that I personally would keep an eye on always. And now, something like this, it's been on a big run. It just ran up, almost touched this top trend line here, looking like about 45.20. So it could keep going, like another 15 cents or whatever. But in my opinion now, like maybe you step in, you buy a couple of puts here. Again, not financial advice. Whatever you do with this information is entirely your own prerogative. This is just my opinion. But I would potentially consider maybe, you grab some puts. You give yourself 2-3 weeks, right? And you wait for the run up here, you wait for the flatness, the rejection, and then you look for the drop of about 2 points, even retesting the bottom trend line here. But if you were to step in here at 45 and buy 44.50s, 44 puts, a couple of weeks at a time, you understand what I'm saying? As it drops and breaks and starts to come back, quote unquote, to reality now after this run up, those options are going to move nicely. And usually Verizon options actually are pretty cheap because of how low the beta is, right? Because it's not a very volatile mover. So that's why something like this, if you're able to buy yourself just a little bit of time on the options and just kind of slowly ride that rejection and that sell-off back to the moving average here, again, 42.5 or whatever. I mean, think about that. If you buy 44 puts and it slowly pulls back over the next week and a half to 42.70, you and I both know what's going to happen to the value of those puts. So that's why I always used to like Verizon, because options are usually pretty cheap. You'd be able to afford time compared to another tech stock that's more volatile, even something like a DraftKings. If you buy a couple of weeks of time, it really starts to chunk up in value because it can move so much within a day or a few days, right? So, something to throw out there on the short term. But again, in the long term, I mean, this is exactly what we look for the most part. But let's look at stock charts real quick, and we'll see if we do have some indicators lining up a potential pullback, right? So this goes back to basically when the bull dropped in 24. And again, look at this stock. We run up. We're basically sitting at the 50-day moving average, predominantly above it, it looks like, for more times than not here throughout these 5-6 months or whatever. And now, boom, look at that. We have, what's that, 6 white or green candles in a row. Stock runs up to 45 new highs, breaks above the top Bollinger Band, 44.73, and again approaching that one trend line. That's why I feel a pullback is imminent. And we also now have RSI sitting slightly above 73, potentially looking oversold. Can it keep climbing up? Of course. Again, I was looking for what, 45.20, 45.25 on that trend line, but you can see even previously as it got up above that 70 benchmark, it took like a day and a half, but then the big rejection and the big pullback to earth happened. You can see, look, got up above 70, flattened out for a couple of days, and then boom, big drop. Got up above 70 for a few days, boom, big drop back to like 50, right? So this is why if you can time these climbs and these sell-offs, especially with options as cheap as something on Verizon, you can really see some crazy returns. And even the scenario I laid out, puts with a couple of weeks, who knows, they might cost 30, 40, 50 bucks each, which we know is pretty cheap for a couple of weeks of time. But if it does pull back to sub 43, 42, I mean, those options are going to jump up probably 400 or 500% in my opinion. So something to keep in mind. But I also wanted to look at just some recent news. I know I'm all over the place in this video, just bear with me. Boost for GLTE, 5G coverage in Savannah, Georgia. Very nice. See now that it's up? AT&T to tap AI analytics to boost key metrics. Time to buy the stock, question mark. What do I always say? When they get beaten up, everyone's bearish on it because they just follow the trend. They don't want to look wrong. They don't want to say, in their opinion, that they feel it's a good investment if the stock continues to drop down. So while VZ was dropping to 32, 31 and approaching those new lows, everyone was bearish. Nobody wanted to touch it. Once it rebounded all the way back up to 40, 40 plus, now all of a sudden it's looking good. What positives do they have on the horizon? Is the stock undervalued in the numbers? Should you buy it for the next 12 months? You're already late to the party, right? Because if you did this article a couple of months before, I may have had a cost basis of 34, 35 instead of 40, 42 or whatever the heck the stock is. But again, not necessarily beating these people up. I know we know there are a lot of stocks that trade publicly. So to actually keep an eye and have perfect timing on all of these publicly traded companies is virtually impossible. Shares of Verizon up 20% year to date. We're moving. Verizon's restructuring impacts stock performance. Yeah. So it says here, this is why I actually just mentioned this in the Discord. I was reading these articles going into this video, and I posted an update in the Discord here. And as you see, VZ recently disclosed that it's set to incur a severance charge, right? Because they're laying off people. So severance charge between 1.7, 1.9 billion in the third quarter of 2024, which is next quarter. Estimated time of October 22nd, I believe it says. So roughly 3-4 weeks from today. So in my opinion, keep that in mind. In a bid to trim operating costs, telecom giant announced voluntary separation program in June for management staff based in the United States. Per the program, about 4,800 employees are expected to depart by the end of March 25, and over half of these workers are set to leave by the end of September 24. The company is also planning to discontinue non-core businesses and stop using certain real estate assets. This will likely result in additional charges of around 230 to 380 million. So they're also saying that these losses will now be potentially incurred immediately here moving forward, excuse me, in Q3 and Q4 of 2024, which is next earnings and the quarter after. Verizon missed revenue estimates second quarter, fewer smartphone upgrades. Company finds itself in a tough spot as competition with AT&T, T-Mobile intensifies. Worth noting, are witnessing subscriber growth driven by the growing popularity of unlimited plans. Verizon's restructuring actions and focus on core services are part of its strategy to stay in the game. Moreover, the company is set to acquire fiber optic internet provider Frontier Communications for $20 billion. Following the close of the deal, Verizon will gain 2.2 million Frontier fiber customers in addition to its existing 7.4 million client base. So now we're approaching almost 10 million customers there on the fiber optic side. The combined entity will have 25 million fiber passings. The buyout will better equip Verizon to combat the morning competitive pressure from industry rivals. So, we know that these landlines, these internet connections, we know that these are necessary, right? And it basically seems like, I don't want to say they're necessarily giving up on the mobile subscriber side, but they see the shift to AT&T and T-Mobile, and as this article indicates, it may be because of their unlimited plans that they're offering. So it seems like Verizon is now making the move and just moving more of its chips into the actual landline, internet, fiber optic provided ISP segment, because I guess that's where the bread and butter is going to be now moving forward. Which I guess is fine. We know these companies, sometimes we have to, shift out of one sector and we have to reinvest into another sector. I mean, if the other competitors are really just going to beat them to the punch on the mobile side, then yeah, why not focus more on, the ISP and the fiber optics infrastructure? Makes sense to me. Severance 1.9 billion. So yeah, this is why I was saying in Discord, this next quarter now for Verizon, after this big run up, now we may have a miss and a drop in the stock price, right? So in the short term, we know anything can happen. It could potentially break up above this line and run to like 48 before dropping and selling off. But here, let's look at this. Ex-date October 10th, payout November 1st. Okay, so That's about 3 weeks. So in my opinion, we could see a run up again to this trend line, about 45 and a quarter. It could reject maybe and pull back over the next 2 to 3 weeks. And then as you see, we approach October 10th. That's the ex-dividend date. Again, the difference between the ex-dividend date and the payment date is the ex-dividend date is the last day you have to be on file for owning shares of the stock to qualify for dividend payment on dividend payment day. So that is the difference between dividend payment date and ex-dividend date. But usually, as the X date approaches, that is when volume comes in, like, the day before, the day of. That is usually where volume comes in because people reposition into the stock awaiting the dividend payout, as you see, roughly 3 weeks later. So, in my opinion, you're probably going to have a slight run up here and then a sell-off for 2-3 weeks, and then we go into the 9th and the 10th, and then you're going to see a potential bounce with the volume coming in. And now earnings are slated for October 22nd, and in my opinion, even if revenue beats, chances are they're going to miss on the profitability side, since we just mentioned almost $2 billion in severance payouts and real estate losses, up to $380 million or whatever they said. So even if the revenue is kind of close or in line, chances are, in my opinion, the EPS will miss, and that'll potentially bring the stock down back to the low 40s or potentially even sub 40. So I know we're getting a little ahead of ourselves, but long term, I still like it. In the short term, though, you could have the potential put rejection here on the put options, and then you could have the potential call bounce on the ex-dividend date, and then you can have the potential put play for earnings if they are going to say that they incurred wider losses than expected, so the stock takes a hit. All right, so again, I understand trading isn't perfect and it's hard to precisely time some plays sometime, but in my opinion, just laying out the next month or so, I feel that's how the VZ stock is going to move. So again, whatever you do with that information is entirely your own prerogative, but that's maybe a couple of the ways I would personally play it. But we can see a rejection off of that trend line back to the mid Bollinger Band here will probably be about 42 and a quarter, 42 and a half, which is like here, which again will probably meet up like with the 20-day, right? As it slowly starts to pull back, this will even out with it, right? And it'll get to about 42 and change. So that's why I'm saying maybe in the immediate short term some puts maybe, but it's up to you. MACD flying high, look at that. That's the highest it's been really going back to late January. But again, with the RSI on the daily now potentially overextended above that 70 benchmark, we could start to see the sell-off and the pullback. Look at the 50-day here. It was off the screen here at sub 35. 200-day. Off the screen at sub 35. Now it's up to almost 40 there. Look at that, 39.44. Right where the bottom Bollinger Band is, 39.5. So like we always say, in my opinion, if we do start to chunk down and sell off, it's first going to have to hit that moving average, that trend line, that moving average, that mid Bollinger Band, that moving average, then the bottom Bollinger Band, and that moving average. So it seems like a big drop. Technically it is on a percentage side, like 15%. But if it does start to break and pull back to that level, if you did want to get in, that's when you may potentially want to strike. But of course it depends when and where that happens in relation to those earnings. Because again, in my opinion, I think they drop. I think they miss next earnings. But let's look at weekly. See weekly RSI as well, right? We've been on the up and up. So that's why I'm saying we could have a little bit more maybe to that trend line, and then we can start rejecting and we can start selling off, and a lot of traders will see, well, it's at the top of the range, RSI is topped out, so I could probably grab some puts. It's good for a couple of points sell off. That's why I'm saying, that's why I laid out the scenario for you, in my opinion. But we can see MACD recently crossed bullish to the upside here. September, it's really just been on the up and up here, breaking out of this kind of sideways consolidation zone. We're above the 200-day now, which is also in the low 40s. We have the mid Bollinger Band here, slightly below 41, which is why I'm saying, in my opinion, a pullback to 43, 42 and change back to 41 may be inevitable. But the 50-day as well, look at this. Fell off a cliff. Stock was up here in the high 40s, completely dropped down to those new lows. 50 days sitting here at about 33.5. Now it's up to above 38.5. And of course, as we know, that's what we like to see. But let's check the pivot points real quick. I'll let you go. Just I just love it because again, it's the Buffett method. You're seeing the Buffett method in real time. And the whole time it broke here out of the 40s and started to drop into the 30s. That's what I mean. No one wanted to touch it. Telecoms aren't the thing. Is it a value trap? Is it going to get worse before it gets better? They have to restructure. Now they're laying off people. They have to pay out severance packages. But then as it gets beaten up and no one's paying attention, that's where we go from new lows of 30, 10, 12-year lows, whatever the heck the story was. And now, boom, look at that. Immediately raged back up to 40 almost just within about 2 months. And then flattened out and boom, took the next leg higher. And that's why I'm saying now you're approaching roughly the 12-month time frame from the lows of 30 with the stock up roughly 50% while getting paid dividends the whole time to own it. And if you sell 3-4 weeks from now, you're going to pay half the amount in capital gains tax. We both know as an investment, it really doesn't get much better than that. But RSI topping out close to 70 here. We're well above this top resistance trend line that was at about 43.5. Let's look at this previous one because it looks like that's where it stopped. Yeah, so you can see roughly 44.97. Stock went up 45.05 and stopped basically right there at 45 even. So this is why we can have a potential rejection here at around 45 psychological level and now start to pull back and sell it off a little bit. And it does seem, in my opinion, that may be the short-term play on both the daily and weekly charts that I'm personally looking at. But, yeah, that's pretty much it. Just wanted to highlight, again, something like we say, gets beaten up, they take it down to new lows, they take it out of the spotlight, they want you to forget about it. Oh, it's a stick in the mud, it's not worth owning. And then when no one's looking, boom, all of a sudden, we're back up to 36, 39, 41, 45. We're at new highs. Oh, is it worth owning now? Should you put this in your portfolio? You're already late to the party. And this is like we always say. When they do that, then they run it up, then they talk about it again to you. Just like Rolls-Royce. And now that newer, later to the party volume pumps it up even further. But that's pretty much it. I'll end it there. But like I said, if you did believe in Verizon long term and you were like adding and piecing into the position down here in the 30s, let us know in the comment section because I'm sure you're very thrilled with the stock rebounding, hitting these new highs, and paying you dividends also along the way. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.